Thanks, like.
So that's now our intro. That's the fun bit.
So my name is Trish Pigott. I am the owner and mortgage broker at DLC Primex Mortgages. I've been a mortgage broker for over 20 years. So we're summarizing today what happened with today's April 10th Bank of Canada announcement, and unfortunately no changes to those interest rates. So with today's announcement, Bank of Canada maintained their rate at the 5% mark. And what that means to homeowners and Canadians in general is that there's no changes to the prime rates that the banks offer consumers. So prime rates affect variable rate mortgage holders. They affect anybody with loans or credit attached to the prime rate. So even though the overnight target rate has been maintained at 5%, that does leave our prime rate currently sitting at 7.2%. And that's what we were hoping would come down eventually. At the beginning of this year, there was a lot of anticipation that today's announcement might be the day when we might see that first rate cut come. And unfortunately, we just don't have the data that is needed for the Bank of Canada to reduce those rates right now. So what that means to homeowners in general is that the variable rate mortgage was anticipated to be kind of the sought after product earlier this year, and that has changed because now that we're not seeing that come down as quickly, the short-term fixed mortgage rates are substantially less. And when I say substantially, we're talking about probably a full percent point. And so that's reducing people's mortgage payments, and it's also helping people qualify for larger mortgage amounts, which often is needed in our BC real estate market. So with that, the data that came out today was that they're getting close. The numbers are coming closer together for the Bank of Canada to bring those rates down, however, not quite enough. So inflation is within the target range, but it's not quite at a point where they're comfortable to bring those rates down because the economy is still on the verge of being a little bit heated. There's some things that are affecting that, and in turn, the minute that the Bank of Canada reduces the interest rates, we all know what's going to happen to the housing market. And so the spring market has already kind of taken effect. We're seeing a lot of people go into multiple offer stages again when they're writing contracts on properties. We're seeing properties being sold for over asking once again. So you can imagine what's going to happen and the concern coming from the Bank of Canada that when they do reduce those interest rates, that we are in fact going to see that real estate market get a little bit hotter than what we're already at today. So right now we're anticipating that change hopefully to come in June. Most are maybe thinking that we probably might see a July announcement. Again, everybody with anything attached to a variable rate mortgage is hoping the sooner the better that those rates will come down. However, my prediction and some of the predictions I think we've seen this morning and leading up to today's announcement is that that might come in July, and we might see maybe one, maybe two reductions this year, and then any further reductions happening in 2025 when inflation is hopefully closer to the target range that they're looking for. So interest rates are not going to change on the variable rate mortgage anytime soon. And so that being said, it's not necessarily a bad product to either have or to be taking because there's always a product that is suitable to each individual. But the benefit itself right now is just giving people confidence that it is likely that those changes are finally coming. And Bank of Canada is they're not moving it too quickly, but they're also commenting that it is going to happen. It's just a matter of time. So I think that we are going to see a reduction come in the summertime. The initial prediction was that we might see 3, maybe 4 reductions in 2024. Personally, I think we might see 1, maybe 2. Going into 2025, the prediction right now is that we might see anywhere from 4 to 6 rate reductions. However, again, data is all going to drive all of this. So all it takes is, we're at record highs on oil and fuel prices over the past 6 months right now. So things like that are going to continue to drive up inflation. And if inflation continues to stay high, that's going to force the government not to be able to reduce rates. So, everything's data dependent. The economy is going to drive all of these decisions. For anybody waiting to get into the market, you could be waiting forever. So, prices, I don't foresee prices coming down anytime soon. So the longer that people may wait to get into the market, you might be waiting on interest rates and banking on that for more affordability, but I don't think it will come through home prices. So in summary today with today's announcement and no changes happening, again, just to recap, there's no changes to the overnight target rate, which in turn affects our variable rate mortgages. That is making the most appealing product in the mortgage business today, a short-term fixed rate mortgage. So if you are in the market, you're looking for comparing options, looking at which one makes the most sense for you, you're probably going to get approved and pre-qualified at a higher amount going into a short-term fixed rate because the spread is so much lower than what today's variable rate mortgage is. So for those of you that are waiting on the sidelines, trying to determine when the right time is to get into the market, I would say start that process now. Get your pre-approval or your pre-qualification done now so you know exactly where you stand in today's market, because if those rates do come down, you're only going to improve what your qualification is in the future. So don't delay it, start out, get your paperwork in order, you won't regret it, and if anything, you know where you stand.
Perfect.